Welcome everyone to today's presentation. I am really excited to introduce our speaker. Gary Miller is the agency principal of the Miller Financial Group. Gary has been a broker for over 41 years and will share some lessons learned as a third-generation independent insurance agency owner and principal. By embracing technology, the agency has been able to re-engineer critical agency functions and position the agency to become more consultative and nimble. They are also able to better educate their clients on how to manage risk and uncertainty. Welcome, Gary, and take it away.
Thank you, Stacy. And although I can't see everybody, I'm honored to share some of my experiences and lessons learned. I have an outline that I shared with Stacy that I'll try to follow, but I want you to know that if you have any questions during my remarks presentation, please, Clivens, go ahead and interrupt me because I want to make sure that I answer everybody's questions.
No problem.
I want to set the stage first is that what I've learned as a broker is that there's three primary ways that we have a critical position strategically in our industry. And I think you'll get the theme when I talk about it, but we need to become the primary educators on the nature of risk, uncertainty, and insurance. And to become that master in that discipline, which requires a lot of study and hard work, we need to recognize that we need to grow the insurance literacy so that consumers learn the proper way of buying insurance. And finally, the premise that insurance is a commodity, we need to kick it to the side because it's not a commodity. It's a very sophisticated buying decision. So let me talk a little bit about the present landscape. As Stacy shared with you, I've been a broker for 41 years, but our family's been in the insurance business for over 100. And so I've seen many channels of distribution. The direct-to-consumer model, such as State Farm, Geico, Progressive. I've seen the independent agency model, which obviously I've been a part of, where you represent more than one carrier, and also the e-commerce digital internet direct-to-consumer model. Okay. I think the market distribution system that seems to be growing the most right now is the independent agency channel. And I also think that as agents and brokers, we need to understand that executives today, they continue to be focused upon market share, in my opinion, as the first priority, which I think doesn't necessarily afford the proper allocation of industry resources. And I think that's been evident if you look at all the commercials that are being advertised about, the property and casualty products or even the life products. They're trying to make the argument that buying insurance is really a commodity, and it's not. So we can't become blinded by the pursuit of market share. And I think the consumers are demanding that we become the educator. So we've all heard the expression that was introduced by Geico, the middleman. Well, I think we need to push aside the middleman concept and realize that if we're going to define our role, yes, we are in between the carrier and the consumer. But if you look at the labor trends at the federal level, where the real growth and the engine is the intermediary. And the intermediary broker is basically agents, brokers, advisors. That's where really the growth is. And I think that's a reflection that the consumers are saying to the industry, we want to learn about insurance. We want to understand the role of how insurance companies bear risk. We need to understand the risk-bearing system. So agents and brokers, you can't be afraid to talk about the quantitative side of our profession, such as probabilities or likelihoods, expected value, frequency and severity, the normal distribution. You got to be able to talk to that, because if you relate to them that way, then they're going to have a better understanding of the nature of risk and the nature of insurance. So where do we and what do we need to tackle next? We need to understand who is our customer. The consumer, they need to be led and educated to recognize that price of insurance is not the only yardstick or determinant of the insurance purchase. And we need to encourage an alternative view and don't always cave into the pressure. Oh boy, I have a new client that wants me to focus strictly on price. We know it's a price sensitive purchase. We know that. But I think the tough challenge is why selling insurance as a commodity is an easy task. But if you're going to try to educate the consumer of what are the yardsticks and the metrics, it's more than the frequency of invoices that you get in the mail from the company. And if you're unfortunate to have a financial loss that's an insured loss, some consumers, if you read the reviews on the internet, some consumers aren't very satisfied about how their claim was handled. And many times it's the fault of the broker because they don't know the loss settlement value provisions. They don't know the name of perils. They don't understand hazards. So there's a lot of things in that contract of insurance that are very problematic. So we need to grow a new appreciation on the nature of risk. I taught for 12 years at Temple in the risk management insurance department in the Fox School of Business. And one of the things I always introduced at the very beginning was that we deal in the arena of pure risk. Pure risk has two outcomes: loss and no loss. Speculative risk, which is a risk that the stockbrokers or the wealth managers get involved with, they have a third outcome: gain. Okay, but insurance was designed not to profit. Okay, you either have no loss or you have a loss. And if you have a loss, the most likely solution to address financial losses is you pay a small premium that binds an insurance contract. So you transfer the responsibility of that financial loss through an insurance policy to the company. So you're budgeting a fixed premium that each year you can anticipate and manage. So there's no greater premium that you're going to be assessed as a traditional concept of being indemnified. We need to explain how risk pools are spreading risk. You know, if you think of it, 97% of the insurance buying public do not have claims. So that means the 2 to 3% of those that buy insurance have claims. So that's the risk spreading concept, that you have 97% underwriting and financing the claims of the few. Okay. Now let's talk about how agents and brokers can lead and engage consumers and insurers. Well, we've learned to be very agile and nimble. You know, we're a flat organization. Okay. Our agency, yes, we have an answering machine, but when a consumer calls after hours, it doesn't go to the answering machine. It comes right to me. So I told my IT company, I don't want any messages left on a voicemail. So that way I'm not chasing my clients, and the clients, they really feel, because I can quickly delegate who that caller is going to go to after hours. So we are really 24/7. And, you know, Agentero has a smart app. And if you haven't looked at that smart app, I think we've all been trained to understand that being in touch with the consumer, our clients, is very, very important. And the more contacts you have throughout the year, the more likely the consumer and client is going to think of you as their insurance counselor. So take a look at that smart app. Agentero has the ability where a client's going to be sent an invitation and they can go ahead and sign up for it. And that allows them, through the integration with your client management system, they can look at their policies, they can print out auto ID cards. So it's really no cost to the consumer, and it's part of your relationship with Agentero. And it's a branded smart app of your agency, not Travelers, not State Farm, not Nationwide, not Allstate. Okay, it's, for example, the Miller Financial Group. All right. And so the agencies need to focus growing partnerships and enterprises that will enable you as an agency principal to lead your organization, and I believe accomplish a very, very noble mission. My grandfather served for 45 plus years with one insurance provider, Metropolitan Life. And if you take a look at history in the Depression, when the banks ran out of money, those that had whole life policies, they were able to borrow against it, and they quickly learned that you didn't have to pay it back. So it was the forerunner of what we hear today of QE, quantitative easing. So the life insurance industry back in the 30s, they were viewed in a positive way because the consumer had something tangible that they had purchased, and they were able to borrow and get some liquidity because the money in the banks had already been taken out. Okay. We need to become better communicators in the message so that we can develop new yardsticks, new metrics. And we need to, in a professional way, demand of our underwriters that, hey, okay, we know you need a submission, but we need, if we're going to educate our consumer, we need to find more time to be consultative. Therefore, the days of filling out applications and paper chasing, we've got to re-engineer that. And that's what technology has enabled us to do, is technology has enabled us to capture some of the wasted time that has been spent so-called in the back room and be more consumer facing. And if you take a look at the mergers and acquisitions today, note how many former direct-to-consumer or captive and distribution systems are now acquiring or merging in the independent agency distribution system. When I came into the business in 1981, there was the talk of the demise of the insurance broker, independent. Well, I think that's turning around. And so you take a look at Allstate. They acquired CNA Personal Lines. They acquired Encompass. Nationwide purchased Allied. They purchased Hardee'sville. And Liberty Mutual, they purchased Ohio Casualty, and they purchased Safeco. So these are all big, diversified enterprises that bear risk, but they recognize that they really need, because the consumers are demanding, that we've got to take them, the consumer, and unseal the black box and illuminate them so that we don't continue to play the shell game. Okay. So we need to understand that we are the corner stores in the community. All of you, just like our family, we support many volunteer causes, community interest in the workplace, at school, youth sports, faith communities, okay? So we are the corner store. And we also are associated with a very valuable profession, because in order for generations to grow and technology to take place and advance, you need to understand how to manage risk. So I tell my team, we need to be the outsourced risk management arm for the household and the small business. We get paid by the companies, by our commission. Let's take that compensation and benefit the consumer by becoming the primary educator. So finally, how do we create, develop, and grow insurance and financial literacy? Well, not only do we need to be good listeners, God gave us one mouth and two ears, so we use them proportionally, but we must employ empathy, and then with empathy, educate, and you know what? The sale will come. The story that I share often is that the pastor, the priest, the rabbi, when they come into their new congregation, they don't start out with holding their tin cup and say, fill my tin cup. What they do is they get the buy-in by sharing their relating story, or some of the financial advisors would know the phrase, my elevator pitch, okay? So you get them to feel comfortable with you, you earn their trust and favor, and the sale will come. Trust is always earned, and that's because the consumer always has a choice. And how do you do that? You stay in tune to current trends of the industry. You know, artificial intelligence has been the key engine of recent, with machine learning technology, where agencies that don't embrace technology, they're going to have a hard time competing. And technology really has accelerated the engine of advancing growth. It's not going to become our master. The computer will never become our master, but it's got to be a tool that allows us to do more things in the limited resource of time we have to serve the best interest of the customer, the consumer, and teach them how to buy insurance properly. Teach them that it's okay to have a larger deductible. Explain to them that the insurance industry is very inefficient with small dollar value claims. Why do you buy insurance? Well, besides peace of mind, it's also because you can't put money aside into a special fund called my claims fund. So you got to teach them that the best way to manage risk is you pay a small premium and you transfer the rest of it to the insurance bank. That's what insurance companies are. They're insurance banks. Okay. So if you stick to the fundamentals, I think that's very helpful. If you're disciplined and if you're available, technology makes us more available. We can become more noticeable. And I think I've learned that when I latched on to Agentero, I think they recognize that the consumer needs to plug into a place where they can get more choices, and they need a human being to help guide them in those choices. And if you can grow in the mindset, the brand, that it's the agent broker that is really where you want to plug into, not the insurance carrier. We need the insurance companies, yes. But I think the real place for the consumer to plug in is to that middleman, you and I as agent brokers and financial advisors. And I think maybe I could suggest you become a teacher part-time. Maybe you could teach a course in a given semester at the local high school, transfer your knowledge, write in the newspapers, write a book. There's many, many ways that you can give back. And as you know, givers gain.